Hey everyone, welcome back to the HASHR8 podcast. We've been gone for a while, took the month of July off to relax a little bit, did a little bit of a refresh on the show, but it's good to be back. Happy today to be sharing some time with Leo Zhang of Anicca Research. Am I saying this correctly? Is it Anicca or Anika?
It's Anicca.
Anicca, okay,
Yeah.
All right. But thank you for coming on the show, Leo. I appreciate it, man.
Thanks for having me.
Hey, it's a pleasure. I wanted you to be our first guest as we return from our break because you have put out quite the paper, and I think the entire mining community has been talking about it. It's the Alchemy of Hashpower Part 1, right? So
yes. Yeah. So it's actually the origin. I didn't have the plan to break it into two parts, but the original paper is a little bit over 30 pages long. So in every single reviewer of mine recommend to cut it in half and for better readability. So yeah, I had no choice.
That's awesome. It's great to be able to extend that information out a little bit longer as well, right? You know, it's nice to get it spread out into small palatable bites so that we can process it and talk about it and, potentially have two shows instead of one. It works out.
Yeah, I think the community, especially for mining, doesn't really have the habit of reading academic paper yet. The kind of, pages and pages of formulas and very dense type of information for 40 pages long. I think the industry doesn't have the patience for that kind of stuff.
It's true. We're bite size. You gotta give it to us in little chunks. But what led you to writing this paper in the first place?
So I'm thinking of a 7-part series. It used to be 6-part, but now it's 7-part because I broke that paper into half. That basically talks about my perception. Sorry, my dog is harassing me.
Okay.
As the mining industry being developed for the past 10 years now, and I think it still has a lot of very obvious problems. Right, the information is very fragmented. People are just hanging out in different chat groups, and that's where all the information is based. And it's still there's no standard risk management practice. There is no real way to protect the swing of the revenue. And for traditional investor who wants to come in, there's so much misinformation. There's so much firsthand opinions based on just empirical evidence. And there is no framework for understanding this phenomenon as an asset class. So in this seven-piece series, I want to gradually move towards building a preliminary framework for understanding hash power as an asset class. So with each of the paper, I want to attack different aspects of it. So my first one, Bitcoin mining's three-body problem, I want to just draw a very, very high-level macro view of the forces that's in play in the market today. And in my second article, the one I just put out, I want to talk about how hash power is not just mining machines. It comes in many various forms: cloud mining contract, hash power forwards. These are all part of the larger asset class, and they need to be analyzed in relatively similar fashion and needs to be understood properly. So that's my intention. That's my incentive for writing this paper, and that's the goal I hope to achieve with this entire series.
That's awesome. So, what are the topics for 3 through 7?
So, for the future ones, I'm planning to do one on the industrialization and decentralization in hash power ownership. Okay. I think the decentralizing mining is always in back of people's heads, but it's not as important or rigorously discussed anymore now that more players with bigger capitals are coming to space and more people realize, oh, I guess that's just one directional street, and there's nothing we can do about it. But I do think there are other various. I do think that it's going to become more resource intensive. I think it's going to become more capital heavy than ever. But I do think there are other ways that we can possibly decentralize the ownership of hash power. For instance, Stratum V2 is a good start. Mm-hmm. So yeah, so I want to talk about industrialization and in path to further decentralization with various other creative means to achieve that. Another paper I'm thinking of is doing financialization of hash power, just risk management framework, and how to think about what's the best way to, if you own a certain type of hash power assets, what's the best way to protect your downside, and what are standard procedures, standard protocols that you can use to think about your risk and return.
Sure.
And lastly, I want to draw an architecture for hash power exchange that just essentially virtualizing hash power, allowing miners to issue hash power as a commodity, and being able to trade with much better price discovery mechanism than just buying selling machines with each other.
I guess that brings it all to life, right? I mean, if you're looking to highlight the market, you're hitting all the important parts, and I think that hash power in particular it's quite nebulous for everyone to really comprehend, and there's so many moving parts to the industry now that's springing up around it. This is great. I think the research so far that you've done and the work that you put out has been fantastic. And let's jump right into this. Alchemy is a word that I'm sure you selected very carefully. So there's a lot in the title. Why for this did you choose Alchemy of Hashpower?
Yeah, so the original train of thought was I wanted to talk about reflexivity in hash power. I want to talk about how the expectation of hash power and the expectation of price sort of reinforces each other in a reflexive manner. So actually, that's actually the topic of the second part of the alchemy of hash power. And when talking about reflexivity, the obvious person to quote is George Soros. So the title is a nod to his masterpiece from 1970s called The Alchemy of Finance, in which he I think that's the first time he properly introduced the concept of reflexivity and how that shapes his approach to investing stocks, currencies, and credit market. And I think first of all, I personally find it a very illuminating work. And cryptocurrency itself has definitely shown many reflexive patterns. But I don't think it has been properly discussed in actually nothing has been properly discussed in the hash power market at all. So I figured it would be a good gateway drug into building more theories and framework of thinking for.
I want to jump in on that. So you mentioned that you don't feel like it's been properly discussed at all before. Why not, and why now?
Yeah, so I think compared to just a purely financial market, hash power market is much more difficult because it involves the physical side. It's constrained by supply chain and Bitmain's internal drama. All these things cause delay, and these variables are very difficult to predict. So if you're trying to establish a framework or a financial theory to explain all these things, you just have to extend very greatly. You have to cover a lot of corners, which is one, going to be too abstract and too detached from the reality, and two, nobody has time for that. And so I think that's a huge reason that the abstractions and theories and or just general observations in mining market comes much delayed compared to various school of thoughts that's being applied to cryptocurrency itself, because cryptocurrency market is just information, and that's much less frictional to distribute compared to mining market. Yeah, and another big problem I think is data collection. Right, it's much easier to collect data over the internet, and whereas for a mining market, you have to talk to these distributors, you have to talk to manufacturers, you have to build good relations, and also you have to make sure they're not lying to you. So
yeah,
data collection is a big problem.
Yeah, that's I think the linchpin when it comes to data collection and mining, right? Is especially you'll notice it if you ever ask anyone what their all-in power rate is. That seems to be the hardest number to actually drill down on, because everyone is either trying to seem like they're more profitable than they are, or maybe they just really don't understand how to properly price their power all in. But I totally get where you're coming from there. So Alchemy of Hashpower, you kick it off, you got your title, right? Walk me through the process and why part one has shaped up the way that it is leading into part two.
Yeah, so part one, I want to draw an outline for different types of Hashpower asset classes, Hashpower assets, and they all exist in various forms. I think that people, talk about cloud mining pretty frequently. People talk about investing in mining operations pretty frequently. People write about Hashpower, machines definitely. There are a lot of contents on that, but I don't think there is at least that I have not seen a proper comparison of different angles to invest in mining and what kind of risk and return profile that you are going to get exposed to, and what are some of the ways to use it in combination. That's what I'm trying to hope to accomplish with this introduction. I want people think about all these different Hashpower assets as instruments that you can use in combination in a portfolio. To achieve different purposes. So most investors, they invest in mining through a intermediary. They invest in a fund, they invest in a mining company, and now there are public stocks that sort of tracks mining return. But the big thing with that is, obviously you are fully vulnerable to the mistakes of the managers that they make. If they're not careful with their cash position, they go too aggressive with buying new machines, they can very easily have to shut down the operation when the market turns. We've seen that so many times, right? With Gigawatt in 2018, and Coinmint is not back to life, but there was a period of time they were definitely struggling, and just there are numerous very high-profile mining operations that just got choked when their cash position is drained out. And I want to show why this is so difficult, and why this can change so quickly for the managers of the mining operation and their investors. And when they invest in a mining vehicle, what they are actually invested in, what kind of variables that this kind of risk return are actually exposed to, and I want to show their sensitivity to changes. So in the middle of that section, I wrote I included a portion that's specifically on valuation, a certain type of valuation metric. It's called static days to return to break even. Sorry. And this is a very commonly used metric in the mining community. It's very easy to use, it's very easy to calculate, and the idea of that metric is very easy to understand. So it's not a surprise that this metric became the most popular for a lot of people when it comes to making investment decisions. But I want to show that the inherent flaw of this metric, its advantages are very clear, but the inherent flaw of this metric is that the metric itself is highly volatile, right? When price changes, when hash power changes, and feed changes, this metric becomes all over the place. I want to show its exact sensitivity. I want to show, despite that, this high sensitivity, there's something that we can do with that. The volatility of the metric itself. There are possibly ways to use that as a metric, as a benchmark for building up hedging positions. And use that as a proxy for valuation.
So now with a lot of the products that are springing up to currently support and provide these hedging products, the Bidooda is the prime example, right? That they're already offering these contracts. But to make it more generalized, do you feel like a solid model is currently in place for the pricing of hash? I know, Luxor and their hash rate index is starting to price hash rate. How do you feel about these models that currently exist? Are they doing a good job? Could it be improved upon? What are your thoughts?
Yeah, I think ultimately there's no absolute scientific ways to price these things. The most important thing is there is a benchmark that the rest of the market can form a consensus on. So it needs to be simple to understand. It needs to be relatively accurate. it doesn't even need to be 50% close to the truth. It just needs to,
Mm-hmm.
if everyone believes in it, it forms its own. It becomes a self-fulfilling prophecy. It becomes reflexive in nature. Its performance and people's belief will start
Sure.
to reinforce each other, and people's behavior will start to converge to this, to this metric itself. So I think it's not just building this model and make it popular. Is not just a scientific. It's not just a financial mathematics problem. It's also a marketing problem.
Sure. Well, the market sets the price, right? So
Yeah.
at some point, the confluence and the agreement on that price is what's going to drive it home and set it. And it's great that this is starting to come to fruition. And to me, it's kind of shocking that it's taken so long. Really, I don't know. Maybe it's just now that quote unquote real money is getting put into the system. Although it seems to me like there's been millions and millions and millions flowing into infrastructure for quite some time now. But neither here nor there. As you dove into the economic value of Hashpower, I think you did a fantastic job of starting to drill down on that. So aside from dollar amount, right? When you're talking about the economic value of Hashpower, what are some of the key points that you wanted to convey in that first portion of part one?
Yeah, I think what makes Hashpower a little bit more peculiar compared to other type of commodities or even other digital commodities that
Mm-hmm.
it's a fundamental piece of Bitcoin infrastructure, right? It provides security to Bitcoin. It's the reason that Bitcoin exists. You can still have Bitcoin, but it's different without the same amount of hash rate. So obviously, it's the total amount of hash rate is not equivalent to the security, but it's one of the inputs to that kind of measurement. Um, I think but its value is not entirely driven, by it's not Bitcoin's price is not an input of hash rate. It's the different way. Like you're contributing hash rate to make Bitcoin more augmented, but at the same time you have this intention of collecting Bitcoin from it. So it has the characteristic of being a commodity. Hashpower has commodity-like characteristic,
Mm-hmm.
but it's also a derivative. It's a derivative of Bitcoin, right? You
Right.
purchase almost like a bond that gives you a stream of Bitcoin, varied amount of Bitcoin. So it's a bond. It's an option. It's a commodity, and
Right.
it's a piece of critical infrastructure for Bitcoin. So I want to dissect these various aspects and look at them in from these perspectives, and then put them together and see, okay, Hashpower has this duality, and the two sides are: one, it builds Bitcoin, it makes Bitcoin better, and two, its value is driven by activities on Bitcoin.
So there's always the correlation. I shouldn't say always, but often, especially now, there's been the correlation drawn between Bitcoin mining, drilling for oil, farming corn, right? And the commoditization of Bitcoin. But I tend to lean where you're headed with this, that hash rate is the commodity, right? The hash power is the commodity. Where do you stand on that? Are we looking at Bitcoin and hash rate itself as a commodity, or is it one or the other? Does it have to be one or the other? How do you view that?
Yeah, I definitely think Hashpower is more than just a commodity. That's for sure. It's just because its complex nature of how it receives payout, right? It makes it a derivative by by almost definition. And
Sure.
so Bitcoin is definitely looking more like digital commodity. I think there's very little dispute on that. But at the end of the day, how it's been defined matters very little. Um, I think it definitely matters to the regulators who want to own this thing, whether it's
Sure.
FCC or CFTC or whoever, these acronyms. Um, so having a clear definition makes it better in that not every single acronym think that they own this, right? Try to overregulate this. So the earlier it has a clear definition, the easier it is on regulatory pressure. Um, but as for hash rate, I think it has all these dual nature. Sorry, this multi-faced nature to it. So it's a little bit harder to define as a traditional financial instrument as to which basket does it belong to. They definitely have, buying hash rate definitely has a purchasing security type of quality to it. I know a lot of people don't want to, go there, but I think that's just how it is. And what's interesting
Sure.
about, treating Hashpower as its own individual standalone financial instrument or commodity, if you will, is that, in traditional commodities, in traditional corn production, oil production, what you purchase, um, you have options on, price itself. You have options on production
Mhm.
rate. But when it comes to hash power, it is a digital. It's a digital production. It's digital production that doesn't have the same kind of friction in storage and transportation. I think a lot of that will they will influence how the market organizes and think about valuation and some of the means to build a market around it. Um, I don't know how exactly that's going to play out in comparison to traditional commodity market, but I do think these are critical things that separate it from some of the examples that we see in other markets.
Now, similar to those other markets, do you think that the commoditization of hash power and the financialization built around it and some of these products that are going to be offered, do you think that'll offer more stability to the overall price of Bitcoin? Do you think that will keep us in a tighter range and potentially allow the Bitcoin as money narrative to come to be? Is there potential for less price volatility with the inception and the adoption of more of these hash power contracts?
Mm. So that's uh, uh, it's a question with a lot of questions. I'll
It
start
is,
with
yes.
yeah. So okay, so I think for price volatility, it's a little bit hard to determine because at this point, Bitcoin price is driven by so many other variables, right? Other
Hmm.
than selling pressure. I see, on the internet, still people still try to, calculate this kind of a median mining uh, cost of production as a
Hmm.
way to infer, where's the floor. I think it's a very terrible heuristic because we know that mining cost reduction is a huge range and people's
Right.
risk tolerance is very, very different, right? So I think the path toward between what we have today to commoditization of hash power it requires several steps of abstraction to separate you from the kind of volatility that you experience from all these things. Um, so I do not think it necessarily will dampen the volatility of Bitcoin price itself. I think it will make the mining market much more organized. I think because it's much easier for you to plan your investment cycles.
Sure.
I put in investment in machines today. I know that in 2 3 years, well, relatively with relative certainty, compared to the kind of information I have today, with the help of these financial instruments, I know 2 3 years, I have enough money to reinvest.
Hmm.
I know that every month my cost is I can cover my operating expense rather than I have to guess how much I make next month and
Sure.
I tend to miners tend to oversell or undersell. Um, so I think there will be less guesswork, and hopefully that means traditional investors or other investors who have been watching this on the sideline become more comfortable with participating directly instead of through these very large mining vehicles, because I think that actually it kind of exacerbates the centralization effect, right? You raise a massive 100 million vehicle, and many other investors start participating. Obviously, there's a um, economy of scale there, but if setting up individual mining operations become less volatile when it comes to calculating risk and return, I think more investors will incline to do that instead of pooling all their money together to start a mega operation, because that's the only way to shoulder the volatility.
So this is kind of a random question, and you have to indulge me here for a minute. So I am of the belief that what you're working on, what some of the others are working on with regards to Hashpower and specifically pricing it, uh, it's going to end up making, Bitcoin Hashpower, hash rate contracts, these markets, a proof of concept for commoditized compute markets in other areas. So, because I love Bitcoin. My life is this thing, right? But when you look outside of it, there's a huge amount of potential. That's all. It's just a very similar function, right? It's not the same thing, but you can very closely. I mean, in some ways, you could probably say that hash power and compute are nearly the same thing, just depending on the functionality at the end of the process itself. Um, I assume from the smile, this is something that you've thought about as well.
A lot, yes.
Okay.
So yeah, I mean that's where the money is, I think.
Yeah. So
yeah.
Go ahead, please. What are your thoughts on it?
I mean, with hash rate, so there are still many steps between, hypothetically, if we have a fully functioning, robust hash power marketplace where people can trade, liquid hash power on secondary market with very little friction. Even after we achieve that, there's still many steps between that to general compute market. The big problem there are technical issues and also financial product challenges. On the technical side, Bitcoin protocol itself is very existing. It's a great way to distribute work.
Yes.
But whereas you have to re-architect with general compute, you have to re-architect what kind of functionality you're trying to build here. How do you think about redundancies, and what's the best, most efficient way to allocate work to all these random nodes, and what level of replicates you need to have. I just said redundancy. I'm sorry. That's redundant. Sure. And on the finance side, I think the big challenge is, we have heard of these startups that try to purchase people's spare storage spaces or compute power from their home GPUs at home to do game rendering, this kind of or just AI jobs for startups that don't have the kind of resources to rent that. They're not, so far, none of them are really successful, because I think the kind of demand is very sporadic compared to Bitcoin, because Bitcoin, you're getting, the stream of revenue. Every block is 6.25 BTC plus some fees. Whereas without the Coinbase component, right, there's much less activity. And I think the key difference between these two markets is that hash power market, if done successfully, is a commodity market where anonymous participants come in to buy and sell hash rate without having to know anything other than, okay, this is the price and this is the quantity. What am I getting? Right? You don't need to know people on the other side. You don't need to know anything. But whereas for compute, it's much more of a matchmaking market.
Sure.
Yeah. So, because different calibers of the machine hardware, different demand rises at very different times. So that's something that you need to gap. But I do think building a liquid hash power market is the path towards general compute, if it can be done in a lifetime.
It can be done. It can be. I mean, I think that we're moving toward that. The wild theory, and it's been sitting with me for a while now. When we talk about the breakup of big tech, right? If there's the potential breakup for the big tech companies, obviously Amazon is a target. AWS is a big component of their business. If AWS is able to remain intact, then great. But if AWS is broken up, then what you'll probably have is a lot of small regional providers, very similar to how cable or other services are provided to homes. And in that case, consistent pricing is going to come down to a product like this, right? Having the ability to properly price the goods and services that they're packaging, in this case, compute, would rely heavily on a proven model. And I think that, that's a possibility. And again, there's a lot of moving parts in there to to say that it could come to pass as a stretch, but it's just it's a great thought process to walk through for me. It's exciting. I find the work that you're doing to kind of lead me down a path like this is just it's a fun little thought exercise.
Yeah, I think this is a worthwhile goal, and I do think that's a future that will make me feel optimistic. And I think true real Web3, right? Despite this concept has been discussed for a long time,
Mm-hmm.
and we're so far away from that. I think a new form of internet is not going to be built by IPFS or Filecoin or similar type of um, stuff
Mm-hmm. I get what you're
approach.
saying.
Yeah. But I do think Bitcoin is the first step. It's the foundation, right? It
Mm-hmm.
brings a native currency or a commodity to it, and everything else becomes infrastructure that you build on top for distribution of certain type of goods and services. I think
Sure.
storage, compute, these things are things that come naturally afterwards. And once we have that, a decentralized digital economy is will emerge very naturally.
So backing out of this rabbit hole a bit, I do want to get back into the asset class portion of the paper itself.
Mm.
So you walk down through some of the different asset classes for Hashpower, right? First off, you start with the machine market, we'll call it, right? The mining machines that are out there. Um, how difficult was it to compile this information?
Oh, I mean, this article took me 3 weeks, I think,
Okay.
um, and I think uh, I also have a lot of fragmented, piece of information in my head or in my notes here and there.
Mm-hmm.
So I think that the difficult part is to orchestrate a flow that makes sense instead of just being a Wikipedia page of different information. That's not what I want
Right.
to achieve. And I think there are
Right.
plenty of contents that serve this purpose. I think the difficult thing is a lot of people, especially investors or outsiders who are interested in this field, they look at all these information. They don't really have a way of organizing this information. They just don't know what to do with it, right? We're starting to have better and better data providers, and we have more clarity on how this market works. But if you don't know how to use these data, if you don't have a heuristic for you to put these things together, it's definitely harder for you to really understand what's going on in the industry. So I want to have enough of a qualitative description to help with the quantitative demonstrations.
So as you're going through all of the machine data and you're compiling what's important to you, there's obviously a massive shit show going on at Bitmain
Yeah,
right now. How
yeah.
did that play into the data that you were able to pull and presumptions about what's coming in the future?
Yeah, so for the rig data, I used HASHR index put by the Luxor boys. I think that's a huge game changer for the industry, which is
Absolutely.
funny because,
Can we forever call them the Luxor boys, by the way? I think that would be fantastic. We just dub
yeah, I
them
think,
that from here.
I mean, until they hire a female employee, and I think she probably don't want to be part of
Be
the Luxor
associated with
boys.
that. Yeah.
Luxor boys and
Oh man.
the girl.
There you go.
Anyways, um, where was I? Oh yeah, so I used that information as a basis for my analysis. Um, and I mean historical rig machine rig price. This is a data point that a lot of the individual firms that they collect, but there's nobody is really doing this publicly. Nobody's doing it as a public service. So I think it's really really great for them to do that. And I think the benefit of that is naturally people who even if the accuracy of the data is uh, even if it's debatable, and even if they're not collecting a big enough of sample size, just being
Mhm.
the first person who have a public information available consistently that helps them become an industry leader that people will converge to using this as a benchmark, right? Because um, you're not really using this information to make very nuanced decision making. You're just use it as a benchmark. But if you are using it as a very nuanced decision making process, you probably have to do more research than that. So yeah, I think that's a starting point. But as for Bitmain's new situation, it doesn't really affect this portion of research as much because it mostly impact S19 Pro's shipment date, and due to its relatively short history, it's not S19 is not a big part of the research.
How do you think that's all going to play out? Any opinions on the situation?
So I'm definitely not an insider, and I'm just reading headlines and what people are talking about. But it does seems like they're splitting into two companies, and each side is going to try to rebuild the company, the Bitmain from scratch. I think Bitmain also just forked. It forked the way that BCH and BSV forked, and except this time
they're familiar with that process.
yeah. Except this time I think it's more damaging. I think Zhang's company is not going to touch the liquid aspect of cryptocurrency. I think he wants to focus on the supply chain, make machines, make customized AI chips. It seems more clear that his ambition is to become an IC company, whereas Jihan wants to be the emperor of cryptocurrency itself, right? He's venture into Matrix 4, more OTC deals, more lending deals. He wants to own this. He wants to own cryptocurrency.
The emperor of cryptocurrency.
Yeah.
Wow.
Yeah, that's who he wants to be.
God, man. Well, I'm excited for what this will mean for WhatsMiner.
Yeah, I mean they struggle with their problem too. So I think this. Yeah, sorry.
No, I was going to say, what do you see the problem is with them that they struggle with?
Yeah, so they're still relatively a small company. Actually, their founder just stepped down, just resigned. I think that partly I don't have the full scope of the story, but partly it has to do with the controversy with Bitmain, his personal history with Bitmain.
Yeah.
Because he did get pretty nasty. He was incarcerated for a period of time, end of last year. I think overall, WhatsMiner is in a good position to just to cannibalize more market share from Bitmain. I think overall this is a great redistribution. But the question is, are they going to become the next Bitmain? I think the team is at WhatsMiner is much more interested in just selling as many machines as possible rather than try to interfere with the course of development of Bitcoin itself. I think overall they're very supportive. They don't want to fork it into a new coin,
right.
Or at least not yet. Right? So, but I think this kind of shakeout is great for the mining market. It's great for new manufacturers who want to come in and play.
You think we're too far ahead for that? I mean, there's always the ability to disrupt, but
yeah,
it just seems like well, I mean, I guess if Bitmain breaks up, that's going to change things. But, with Bitmain and WhatsMiner right now, their lead seems to be insurmountable. And God knows that Canaan and eBang aren't putting out anything that is comparable as far as the chipsets and the ASICs go. So
yeah, we'll see. I mean, I think WhatsMiner, the MicroBT guys are very, they have very strong expertise in this, and I think they have the best team, honestly. I think we'll just have to see what next
wait
year
and
brings.
see.
Yeah.
So, as we move through the asset classes, walk me through your thought process and the breakdown of the different asset classes aside from just the machines.
Right. So I think this is a process. This is a process of developing the capital markets. Machine obviously the most rudimentary, and we still have tons that we don't really understand about the machine market.
Right.
So cloud mining, I think, is a very primitive form of financial derivative on Hashpower. Despite the business model, the existing business model of cloud mining is terrible. It's obviously targeting the retail buyers because large miner, anyone with resources, they're better off setting up machines themselves rather than buying a contract from cloud mining, except for very specific occurrences where the overall market price has been subdued for a long time, and hash power is at relatively low, growing at a relatively lower pace. So an example would be April of 2019, when after the hash rate war between Bitcoin Cash and BSV, and price was just fluctuating in the 3,000 range, and hash rate just gone through a reshuffle and didn't grow as much. So in April, the price all of a sudden jumped from 4K to close to 5K, and a lot of smart people realized, some smart people realized, okay, this is the rally, this is the time. And buying machines, some of them they're able to get as many S9s as possible in a short amount of time, but for most people that process is going to take too long. So in cloud mining contract, we're priced according to the average market performance of X number of days before that. So that's a temporary moment when cloud mining contracts are cheap, and people who are able to take advantage of that arbitrage opportunity, they made a lot of money. But that's a very, very specific example, right? It's a very specific type of market condition, and but it shows how terribly inefficient of cloud mining platform is, because there's no real scientific way to do pricing. So the pricing is always just cost reduction with some premium, and that premium is a combination of the markup on electricity all-in cost, and also some premium that reflects market sentiments. So, but there's
the premium is basically all of your profit, right? It's whatever would be your profit moved into someone else's wallet.
Yeah, for sure. So despite that, the cloud mining, I have no problem with the concept itself. I think it makes sense. I think it's a natural evolution of hash-powered capital markets. But the process of issuance and the platform dominance is weird. It's terrible, right? And also they don't really know who their customers are. They can't really scale from here. They target retail, but retail don't understand this. So they can't really. It's very difficult for them to get big buyer.
So you have these products, and as they move into more of the synthetic contracts, like what are being offered from your buy FTX, I think that most people are on the same page with regards to cloud mining, right? It's a model that doesn't make sense to a lot of people, and it's clearly targeting those that are less knowledgeable about the industry overall. So how do you view those synthetic contracts that are now trading on FTX?
For hash rate specifically?
For hash rate specifically, yes.
I think it's a good appetizer. It doesn't,
well played.
It doesn't fill you up. It's far from being a real meal, but you get a little taste of it. One that I think it's very difficult for that kind of product to build volume, because it's only tracking hash rate, and that requires you to have a very specific view on hash rate. That requires to have access to a specific type of information. So it's very difficult for it to convince people to take the other side, and I mean it's very difficult to make the prediction that next month the hash rate is going to drop, or because there are just so many other variables that go into this thing. That's more than just price fluctuation, supply chain, bitmain, how we resolve. These are all part of the equation, right? So I think it's very difficult for traders to take a view on that. So I think in order for this kind of product to be successful, it needs several degrees of separation from all these dirty physical supply chain issues. That all these things, they definitely will still happen, but that impact, the fluctuation needs to be absorbed in some way, so that when the payout is reflected, it shows a clean payout of, it shows a clean index that just fluctuates as some of the variable, some of the easily processed variables such as price, fees, global hash rate, then you have a relatively simple thing to model. You don't have to worry about supply chain and distribution, all these things, TSMC. So I think that's why it's an appetizer, right? It doesn't, and it's not a very fancy appetizer.
It's not the full meal.
Yeah.
So when it comes to that though, if you're able to, and I know Harry Sudak has mentioned this, and others have as well. Bitcoin is one of the only things where the market determines the price of the mining equipment, right? So Bitcoin's price spikes, mining equipment price spikes. Do you think that having a set price on a machine and that being the price for that model would change the structure of the appetizer on FTX? Is there that much? Is the variability in pricing a seriously key component in factoring how these contracts work, or is that something that is just not something that needs to be concerned with too much because the fluctuations in price are relatively small?
I think the fluctuation of the price of the machine is actually pretty huge. Just looking at historical data, because manufacturers, their goal is just to sell as many machines as possible, right?
Absolutely.
As long as it doesn't hurt their profit. And what I realized from my past experience of running mining operations myself is that they are very open to negotiations, the manufacturers. So you show up, you get a price, you tell them you don't like it, and and that might change. And or just when the market tanks a little bit, you go back to them, the price is different. So I think they themselves, they obviously have an internal view on the price of the machines, but that's largely determined by their cost of production, their own cash position, their ability to get wafers again, and less to do with the market. But market drops for 10%, they probably will adjust the machines by X amount of percent. That is a very simple linear model. But I don't think they have a rigorous pricing model, a framework that treats these machines as options, because that's not something that they need to be concerned about. And also another factor is that they need to be the competitors, that's another variable that's impossible to model, I think.
Now, how do pools factor into all of this? Is there any tie into the pools when it comes to the asset class structure for Hashpower, or how you're factoring these equations?
Mining pools?
Mm-hmm.
So I think actually mining pool is the first step towards, it was the real first step towards the virtualization process that we discussed about, between the actual hash rate physical machine, that dirtiness, to several abstraction away and create a financial product that traders can speculate on. Because mining pool, they absorb the variance to a great degree, right? They pay according to, most of the mining pools today, they pay according to the expectation of your production rather than your actual production. So the variance is absorbed by the pool in exchange for a higher fee. So I think that already took away a lot of the fluctuation that has to do with the machine uptime and connectivity, all that more hairy physical issues. So I think that's the first step. And all the future financial products or exchanges that try to offer tradable hash rate product is going to rely on mining pool, is going to build on mining pool or multiple mining pools. And I think it's clear that mining pools are also starting to realize that, okay, as the pool itself, I can't survive, because every mining pool looks the same. So there's Binance pool, there's Huobi pool. Okay. And I wouldn't be surprised if Coinbase roll out their pool. I think this is a trend, right? This is a trend. And everyone wants the miners trading flow because it's mythically large.
Sure. Yeah.
And so in exchanges, with their deep reserve of liquidity, they can provide some kind of pretty risky products that other pools just can't even think of.
Right.
Just to attract that flow. I think we'll see more of these verticalization happen. And this is I think that's inevitable because mining pools themselves, they don't have a really defensible business model. So yeah, either consolidation or verticalization.
So Leo, we could definitely, there's a lot more that we need to get into, but I think that, for now, this is a good place to kind of round this part of the conversation off. I definitely want to make sure that we have you on again to discuss part 2 and all of the future research that's coming out, because this is very important. And I think it's something that is needed, right? We need to make sure that this education can get out there so more people can digest and understand. So when will part 2 be dropping?
I'm hoping in 2 weeks.
Okay.
Because next week I have to spend time with my wife and her family. And the internet in Alaska is not what it's well known for.
Well, that'll be awesome. That'll be a great trip. I hope you have fun up there. And thank you for coming on the show. I appreciate it, man.
Thanks for having me. It's my pleasure.
My pleasure is all mine. And to the viewers of the HASHR8 podcast and those of you who are listening on Spotify or iTunes, wherever you're listening, thank you guys so much for tuning in. We are back in full force. You can expect the shows to keep coming. Please subscribe to the channel. Leave us a comment. Let us know what you think. If there's guests that you think we should have on the show, tell us. We love your feedback. But until then, we'll talk to everyone again very soon. Take care. Thanks for watching this episode of HASHR8 Podcast, a HASHR8 TV production. If you enjoyed this video, please consider liking, sharing, and subscribing for more great content like this every day of the week. In addition, feel free to leave a comment below and let us know who you'd like to see on the next episode of HASHR8 Podcast. We'd love to hear from you. Also, if you head over to HASHR8.com, you can sign up for our free weekly newsletter, Difficulty Adjustment. Every Wednesday morning, we provide you with the latest news and information on Bitcoin, cryptocurrency, and mining. Plus, each week, one newsletter subscriber will be selected at random to receive a free Ledn OS cryptocurrency wallet. So go ahead and sign up today. Who knows? You may be the next lucky winner. Want more from HASHR8? Follow HASHR8 TV on Twitter. It's the easiest way to keep track of our newest content all in one place. That's at HASHR8_TV. Thanks again for watching, and we'll see you very soon. Please remember that all content appearing on this or any other HASHR8 channel is strictly for informational and entertainment purposes only. You should not construe any such information as legal, tax, investment, financial, or other advice. Consult a licensed financial advisor before investing yours or anyone else's money.